G'day everyone, welcome to this weekend update for Australian and also for global stocks. And as I've indicated by the heading here, it really is going to be an exciting period for the next several years at least, and possibly for the decade. Now, as you know, markets run in cycles. We're in a little bit of a softer patch of the year. July, August, possibly into September can be a little bit softer and volatile. But generally the period from October through till April is generally the best part of the year. However, with central banks these days printing money as they are and stimulating stock markets and property markets as they are, a lot of those old rules don't necessarily apply. So I think if you're focused on the sectors globally that have got really strong growth momentum, strong in growth in earnings I'm talking about, then buying the dips is going to be a pretty positive exercise over the next couple of years. So let's have a look at how things progressed last week. The S&P index actually ended up finishing flat on the week. There wasn't a lot of movement in any direction, but it did form a new all-time high on Thursday night. Backed off a little bit on Friday night, but as you'll see from the chart, not a great deal. Now, reporting season is still progressing very well. Close to 70% of stocks are beating expectations, which is higher than normal. Normally that percentage runs in the low 60% area. We're up to 70% this time, so that's really positive. It's not like American stock prices have gotten ahead of themselves. The earnings that are coming through are well and truly justifying the price rises that we've seen over the last year or so. So continue to buy the dips in the high growth in earnings sectors. Now, I'm not talking about growth in stock prices, because there are some stock prices that are going up that are just ridiculously overvalued. So I'm talking about the sectors where the earnings growth is high, but also looks like it's fairly assured. So continue buying the dips in those high growth sectors, and I think you'll do pretty well over the next few years. Just turning to Aussie stocks, the ASX 200 index was up another 52 points for the week, so that's the second good week in a row. And it was a new 6-year high since the middle of 2008, before the GFC. So finally, a little tentative breakout from a long-standing trading range that we've had between 5,000 and about 5,500. The main contributors to that were the major miners. Fears over China are subsiding, and people are starting to come back into particularly BHP, Rio, Woodside, those sort of stocks. But there's also been some really good resource performers further down the line as well. So let's take a look at some charts. We'll start with the S&P 500, and you can see that the daily ranges were actually quite small. Let me zero right in there. So you can see that the range from top to bottom last week was pretty small. Now, we got a little bit of a gap down on Friday, but really, if you pan back, you've got to acknowledge that there's really no weakening of this very strong trend. The price is as far above the moving average as it has been, and it just keeps heading higher. The moving average is still very strong. RSI sitting about mid-range. There's really no indication, despite the fact that some people want to always call the end to a bull market and try and be the hero and pick the next crash. It's always good for a headline, but it's actually a really good way to either miss out on a lot of gain, or if you're trying to short sell into a bull market, then you can get very, very expensive trying to do that. So no signs of weakness in the American market. Let's have a look at the NASDAQ index. You can see it looks exactly the same. Terrific strength in the NASDAQ. And if we also look at the Russell 2000, which reflects the smaller stocks, it's not as strong in the Russell 2000. There's no question about that. It's more in a range, but it's by no means rolled over. Yes, the moving average is flattening out a little bit, but the index is still spending most of its time above that area. And as I said at the start, this is pretty typical of this time of year, July, August, September. It's summer holidays in America. The volumes really dry up a bit, and it's not surprising to see strength in the major stocks and a little bit of underperformance by the smaller cap stocks, but still it's looking pretty good. Now moving to the Australian market, this is the ASX 200 index. You can see we've had 2 really good weeks where it's closed higher virtually every day, and that's largely a result of the major mining stocks. If we pull right back and have a look at the last time we were trading at this level, you can see it was back here in June of 2008. Market started getting very volatile, and we were really into the phase 4 decline at that stage. So it's almost exactly 6 years ago that the Australian market really started to get into a very, very significant downtrend. So some slightly better signs for the Australian market, but look, frankly, I don't follow the ASX 200 all that much. It's a pretty meaningless index to me because it only reflects the top 8 or 10 stocks, and it's you're much more productive to look at individual stocks. Moving on now to commodities. Gold was flat for the week. It did start to get a bit more volatility associated with it, however. Particularly on Thursday and Friday. We had a significant pullback on Thursday, and then equally, as you'll see, the price bounced back strongly on Friday. The actual gold stocks themselves on a global basis are traded this week. They've been outperforming gold and also the S&P 500. But this week, they basically traded in pretty much in the same line with gold and the S&P. Silver still moving pretty much in tandem with gold and still looking reasonably positive. Copper ended up gaining up to $3.23, so some improved movement in the price of copper, and that was with a bit of added strength in the US dollar as well. So that's actually a pretty good sign that copper was able to go up while the US dollar was actually finding a bit of strength as well. And crude oil, West Texas Intermediate crude was steady at 102. So let's have a look at the gold charts. First of all, we'll look at a weekly, and you can see still in this big phase 1 base, and there was not a particularly big range in gold, but you can see it pretty much finished where it opened. Just zeroing in on the daily chart, you can see significant move down on Thursday, but then completely reversed on Friday and gained some on those 2 days as well, and closed at 1308. Silver, very similar pattern. It was a little bit weaker on Thursday and still bounced back on Friday. Looking at the gold mining indexes, this is the main GDX. We're still in the phase 1 base as well, but we are looking pretty positive, and that's really it's gone ahead very nicely for 3 weeks or so, and then we've had consolidation for the last couple of weeks. And finally, just looking at the juniors, it's the same pattern, just a little bit more volatile. There's the chart for copper. So some good strength over the last 3 months. Copper's moved up from just under $3, and we're now back into the $3.20 area. This is nickel. It's been the best performing commodity this year. You can see it's run up quite strongly. It's up about 20-25%, but has really been consolidating since about the middle of May. So overall, from a strategy point of view, Australian major stocks remain fully valued, particularly the banks. But where we're seeing some real performance in the Australian market in the last few weeks has been resource stocks. And I'm not necessarily talking the speculative end, and the volatility associated with resource stocks may not be for everybody, but that's certainly where the performance has been. And we've still got a few bright spots in the Australian resource market. So overall, no change to the message from last week. You need to go where the momentum is. Please don't get stuck with what you feel comfortable with or what you normally do, the sectors of the Australian market that you might normally work with. There is fantastic momentum overseas. So why not go where you've got the most assistance, if you like, in making some significant gains. So for anyone who's not a member of our group, then you have an opportunity to join with us. You have two choices. I can either provide information and guidance and support and education so that you can do it yourself, or if diversifying and actually buying and selling overseas is not really what you want to do, then I have a facility where I can do that for you as well. So the choice is yours. If you'd like more information, there's our website address, and of course always happy to communicate with you. There's my email address in the first instance. That's it for this week. We should see a little bit of softness in the Australian market on Monday morning, but certainly precious metals I think will do quite well on Monday as well. So that's it till next weekend. Cheers.